higher yields and tech stocks. Specifically, why are higher yields absolutely crushing tech stocks right now? That's our topic of conversation today. My name is Kurt Mueller, and we're going to dive in like we always do. So looking at the action from yesterday, Wednesday, March the 3rd, we actually saw the S&P down 1.31%, and that was in large part due to a huge plunge in the tech sector. The NASDAQ, which is very heavily in the tech sector, was down 2.7%. So it's interesting to look at the broad market, though, and if we look at the RSP, which is the equally weighted index that tracks the S&P 500, the RSP was only down 15 basis points yesterday. Again, the S&P as a whole was down primarily due to tech, in large part. And the core issue here is economic growth. And we're going to expand on that throughout this video and just help you better understand what that really means. So with the economic reopenings, the amount of new stimulus that's on the horizon, the optimism around vaccines, Johnson & Johnson, Moderna, Pfizer, investors are basically looking at this scenario and they're pricing in a huge jump in economic growth in the United States. And so that's what they are betting on for all intents and purposes. And that is exactly why yields are rising and bond prices are falling. So for those that don't know, bond prices and bond yields have an inverse relationship. As bond prices fall, bond yields rise. And for the most part, bond prices are falling at the moment because, again, like I just talked about, investors are banking on strong economic growth coming out of this massive amount of stimulus, vaccine optimism, etc. And so that's why we're seeing those bond prices fall and yields start to rise. And so what is effectively happening is these expectations behind this better growth assumption, right? Because of all this stimulus and everything else we've just mentioned, all of that is causing everything that was done last year to be unwound, right? And so last year we saw, during the pandemic, a lot of investors pouring their money into big tech, and now that's being undone. Now, let's go back to last year and talk about why investors poured a lot of capital into tech. I think there's two main reasons. One, pandemic benefits most of the big tech companies, right? That's obvious. We think about Amazon as one of the biggest examples there. The second reason I think investors poured a lot of capital into big tech this time last year is that just from an overall standpoint, tech earnings growth is much less sensitive to broad economic growth. And so again, the two main reasons why we saw a lot of investors pouring into big tech last year was because A, pandemic benefits most of these big tech companies, and B, tech earnings growth is much less sensitive to broader economic growth. So in 2020, if we rewind, if an investor wanted earnings growth, then there really was nowhere else for them to go at the time other than big tech. And that is a big reason why we saw tech shares last year surge, and a lot of those surged to valuations that we've never seen before. So they're, by all accounts, from a historical standpoint, extremely high valuations. But with the reopening of the economy and this acceleration in economic growth, coupled with more stimulus, Fed accommodation, high hopes for these vaccines, investors now can get exposure to earnings growth for much less highly valued positions, right? So they can look at different sectors of the market and get the earnings growth they are looking for without having to purchase tech stocks that are so highly valued. And I think it's important to understand this because in a growing, economic environment where all things are coming together to really fuel a surge in economic growth, then typically what we see sectors like financials, industrials, energy, and materials perform very well during those periods. And so investors can take advantage of the potential, right? This is a potential. There's no guarantees here, but investors can, enjoy earnings growth. And again, they can do that at much, much lower valuations. So the bottom line here is this: yields are going up and big tech is going down. And that is because they are both reacting to the same thing. And that's interesting to point out, is that both those scenarios, yields going up and big tech going down, are reacting to the same thing. And that simply is expectations of better economic growth looking forward. And so we continue to see, and have seen, starting back in September, October of last year, this big rotation from the growth big tech stocks to what we call value and cyclical type stocks. And I think that is going to continue until two things: until A, tech valuations reach a much more historically typical valuation, right? So when these valuations come down significantly, I think that would cause a pause in this rotation that we're seeing. And B, if any of these growth prospects change, then that could absolutely cause a pause in this rotation. But for those that are looking to capitalize on the prospects of a surge in economic growth, then I do think it's important and prudent to look at those sectors. The financial sector, industrials, materials, travel and leisure would be another one. The so-called get out and spend stocks. Those might be some sectors for you to consider adding into your overall mix of your portfolio and just big picture wise, your overall financial plan. So I can't emphasize enough here, though, that number one, cautious optimism, I think, is the phrase of 2020. And it might be my phrase for 2021 as well. Cautiously optimistic and controlling the controllables. I talk about this a lot on my videos. And what I mean by controlling the controllables is simply taking ownership of your financial plan, understanding and being aware of what you are invested in, whether it's CDs, money markets, cash, stocks, real estate, just being more aware of what's going on and making sure that the amount of risk you're taking is in alignment with the risk you're comfortable with, but also bigger picture wise, what you want to accomplish. Is it in alignment with your goals and objectives going forward? So as always, hope it's helpful and relevant. If you have questions, comments, please drop them below. Thank you so much for taking the time to watch the video, and enjoy this beautiful weather if you're in the Augusta, Georgia area, and keep dominating. Take care.